It's March 2026, and the last few weeks have been jam-packed with headlines, from basketball tournaments to bouncing oil prices and mortgage interest rates dipping below 6% and climbing just a little bit above it. Today, we'll look at how the Northern Virginia housing market performed in February, as well as look at some leading indicators that could affect mortgage interest rates as we go through the strong spring buying season. Around our house, the most common phrase you're going to hear is "Hachoo" and "Bless you." Yes, spring has finally arrived here in Northern Virginia. And that not only means pollen season is here, but it's also going to be the most busiest time for real estate. In my last couple of videos, I discussed that if mortgage rates dip below 6%, it was going to trigger a lot of activity, and it definitely did show that happening in February. If you find these updates helpful, give us a thumbs up and also comment. I would love to hear your comments on what you're experiencing in the market, as well as what your thoughts are about what I'm sharing. Let's talk numbers. Closed sales for single-family homes in Fairfax County rose 6.5% year over year. As you can see from this graph, the spring market just began. And if we look back at last March through June 2025, closed sales will rise, meaning more sellers will enter the market. The median sold price increased 3.4% month over month to just over $956,000. The median days on market for single-family homes in Fairfax County was 6, just like in February last year. Notice the difference that happened in just 1 month. January, the median days on market was 24, and then we were down to 6, just like that. The market bounced back to life after the snowstorm, and buyers showed motivation from the lower interest rates. This caught some buyers off guard. I mean, some were looking at these properties in November and in December, and then even the first part of January. But if they were really going to get serious in February, things just changed in a heartbeat. They had to realize that they may have to escalate their sales price. They had to probably limit some of their contingencies, and that was a wake-up call. Single-family home sales in Arlington County was down 11.3% year over year. However, the median sold price was just over $1.276 million, and that was up 1.2% year over year. The median days on market was 7 for the month of February, falling right back in range for the spring months over the last several years. Let's see how the city of Alexandria did in February. Closed sales for single-family homes in the city of Alexandria was up 11.8% year over year, and the median sold price of $1.107 million was just down 4.8% year over year. However, as I've mentioned on other spring housing market reports over the last several years, City of Alexandria is quite unique. Their spring market always shows up March until July. So if we see it a little low right now, I'm pretty sure we're going to see March really take off because that's when things get really active in the City of Alexandria. And the median days on market for single-family homes was 6 days. As a refresher, days on market, when I'm saying these numbers like 6, 7, 10, whatever it may be, what this means is that when the property went on the market, active on the market on a Thursday or Friday, the median time it took for a seller to accept an offer from a buyer was 6 days, meaning on the market, went through the weekend, open houses, maybe a couple offers, maybe a few more to review, and then the seller accepts one of those offers. So 6 days. 6 days means that buyers have to make a decision rather quickly, and that also tells us that the supply is still low, but the demand is higher. So let's talk about the elephant in the room. There's this really nice country road over in Clifton, Virginia that I really enjoy driving down. I mean, the scenery, the fresh air, the homes are beautiful, you see horses. It's just a lovely drive. But as you're going down this road, there are speed bumps, and it can catch you by surprise. All of a sudden you're driving, enjoying your afternoon on this beautiful road, and then there's a speed bump. So you have to slow down, catch you off, and then you get back and you move back up your speed a little bit more, and then all of a sudden there's another one. And there's no rhythm to it. It just shows up and it catches you off guard. That's kind of like the real estate market over the last few years. There's a typical cycle that we're usually used to, where we're just driving down this road, it's the spring, and then all of a sudden we've had bumps in the road. Things like Middle East turmoil and oil prices and interest rates and job reports. All of these things are bumps in the road, and it kind of jolts you for a minute to wake up and say, what's different? What do we need to assess? How do we need to recalibrate? And then can we move on? And we are seeing that happen in the marketplace. However, with all of these bumps in the road over the last few weeks, Housing Wire posted an article that shows that mortgage applications are up 3.2%, ending in the week of March 6th. This is huge. According to the article, it's 11% higher than the same week a year ago. Another interesting fact from the article is that data from Exactus Mortgage Intent Index, which aggregates credit pull activity across their platform, saw a 159.1 reading, which according to their data is the highest since their 2023 benchmark. This definitely shows that there is pent-up demand. There are folks that were sidelined for several years because they didn't like the 7% interest rate, they didn't like the 8% interest rate, but they did like 6%, and they definitely were excited when they saw them dip below that. I knew that would be the case, but remember what we have going on. We have the sideline buyers that put things on hold for 2-3 years that are entering the market, as well as your typical new buyers entering the market because of job relocation. Maybe they are moving up from their condo or their townhouse to a new house. All of these people are in the market as well. So we have two groups of folks coming into the market, and supply levels still low. So this is still causing a high demand, low supply, and this will continue through the spring market. So I say get out and enjoy the country road. But just be aware and keep your eyes ready. There could be some additional bumps that show up. Our job is to provide clarity, structure, and strategy. So if this is something that would be helpful for you, we can't wait to hear from you. Until next time.